Alright, we are coming close to the end of January, and that means it's another Syfe update on my portfolio, because in my previous update back then in November 2022, my Syfe portfolios were doing very badly back at the time, and I remember that my REIT Plus portfolio was around $840, and then for my Syfe Trade portfolio, I think it was making more than 1,000 of unrealized losses. So in today's video, I just want to give an update on how are my portfolios currently doing in the first month of 2023. But before that, let us take a look at the index, right? If we take a look at the S&P 500 Index, the year to date, it has actually grown quite a bit. We are already above 4,000 points. So that is like more than 6% year to date unrealized profits already. Hopefully this momentum can keep going on, and then 2023 will be a really great year. But how about the NASDAQ then? I think the NASDAQ was even more bullish, because if you look at year to date returns, it's already at 11,600 points with a percentage return close to 12%. Okay, that's not all, because even if you look at the STI, it is already close to 3,400 points, which represents more than 4% year-to-date return. And we are only in the first month of January, So we are off to a great start for all these three indices. The S&P 500, NASDAQ, and even the STI has performed relatively well for the month of January 2023. But that is just the index, right? How is my Syfe Wealth and Syfe Trade portfolio doing? As you know, for Syfe Wealth, I invested in the REIT Plus portfolio, and then for Syfe Trade, I do have some individual stock picks. So let's first start with my Syfe Wealth portfolio. Okay, so here is my Syfe platform. Let's start with Syfe Wealth first. So for Syfe Wealth, I only have one managed portfolio, which is the REIT Plus portfolio. And as of now, I think the UI has changed a bit, and you can see that the current value of my REIT Plus portfolio is at $960, which is the current market value. So it has been quite a run up, right? Compared to my previous $840 over the previous 2 months. So I guess Singapore REITs has been quite a good run up, especially this past week. We saw that even STI has risen 4.5% YTD return. But for context wise, my REIT portfolio is still at a loss, because my total lump sum investment for REIT Plus is at $1,000. So at a $960 market value, that represents a 4% unrealized loss. Okay, so you have to ignore all this invested amount. Just know that I invested $1,000. Right now it's at $960, which represents 4% loss. So Syfe Wealth will also deduct management fees every month depending on which tier you're on. Then for the REIT composition, we can take a look what does Syfe REIT consists on. So the main components are still your big sponsor REITs. As you can see, we have CapitaLand, Mapletree, Keppel, Frasers, all these very strong sponsors. Specifically, if we look at the largest holdings, CICT itself is already close to 11%. Likewise for Mapletree Logistics Trust, Ascendus REIT, Mapletree Pan Asia Commercial Trust, all these are above 10% allocation. So I believe the top 6 would have already covered 50% of the portfolio. And if you scroll downwards, then it's the more higher risk plays, right? Those things that you maybe never even heard of, like overseas, India, China REIT, or even like ESR, or this kind of hospitality REITs as well. So I guess the REIT Plus portfolio has seen a pretty good run up since December last year. Let's hope the momentum can continue. I think 2023 will be an important year for the Singapore REITs and banks market. So we will see where this goes, right? Hopefully it will be profitable by the next time I update my REIT Plus portfolio. Okay, so that was my Syfe Wealth portfolio. How did it fare for your own Syfe Wealth portfolio, especially in the REIT Plus sector? Let me know in the comments, and after that, let us go through the Syfe Trade portfolio. Okay, here is my Syfe Trade portfolio, and you can see here that my investment value is now at 11.6k Singapore dollars. If you look at the past week, it has been on a pretty good uptrend, and even if you look at 1 month time, right, you can see that the 1 month change is up by 1.7k. Of course, that's including my $1,000 DCA into it, but it doesn't change the fact that the capital gain has been around $700, which is pretty good, right? It has a pretty good run up, but I don't know if this is a fake bull rally or not, or dead cat bounce, nobody really knows. But you can take a look at what is my DCA plan. And for my DCA plan right now, it has been upgraded. Previously, I was only doing $360. Now it's $375 of QQQM every 2 weeks. And that is because the USD has fallen against SGD. I think the current FX rate is around 1.31. So I could buy more units of QQQM with the same amount of SGD. So that is one kind of risk that you have to consider, the foreign exchange rate risk, when you are dealing with foreign currency denominated assets such as USD. And even if you look at the homepage over here at Syfe Trade, you can see that all your big tech stocks have seen a pretty good run up. Like even Tesla rose by 11%, Amazon 3%, Meta 3%, Nvidia 3% soon. Google 1.9%, pretty good, huh? But I know what you guys are looking for, because you will be looking at what is my return. And you can see that my 11.6k portfolio consists of equity, 11.4k plus $200 of cash. So next month, as usual, I will be pumping in 1000 SGD every month. Every 2 weeks, I'll do a dollar cost average. And you can see that my unrealized return right now is a $24 loss. I mean, that's a significant improvement compared to my previous 2 months, right? My previous 2 months was like in hundreds or thousands of losses. I think the market has recovered quite strongly ever since the start of the year. So I hope that is good news. But you know, hope is not an investing strategy. Right now, my portfolio for Syfe Trade consists of 3 tickers. One is a local REIT, Frasers Logistics and Commercial Trust, ticker BUOU. Now, I bought BUOU at an average cost of $1.11. So right now, current price 1.29. That's a pretty good run up really. Okay, I think I bought around in November period. So you see, from November, it has been on a steady uptrend. And not only that, because it gives dividends, right? I think I collected 1 round of dividend already. But don't take it as financial advice, because stock picking is very dangerous one. I bought it at $1.11 because I felt that that value was good the other time, right? If you have read my previous Syfe update, I said that a dividend yield of 6.5% to 7% is very attractive. That's why I entered into BUOU, albeit in a very small position. So that BUOU position, Frasers Logistics and Commercial Trust, has seen an unrealized profit of $360. So far so good ever since I entered it. Okay, the next ticker is Google, GOOGL. Okay, this one I started Syfe Trade with Google because I was bullish back then. Not that I'm bearish right now, but you see my unrealized profit and loss is still like 482 USD, which is still very terrible, right? But I already stopped dollar cost averaging into Google because I invested in QQQM, which is the NASDAQ ETF. So my average cost for Google is at $131. Right now, the current Google price is at $99, so we are still a long way to go before I even break even. So at least the losses has reduced quite a bit ever since the run up in Alphabet. If you take a look at the 1 month trend, right, it has seen a pretty good run up. Lastly will be the QQQM, which tracks the NASDAQ 100 Index. And the current QQQM price is at $122, whereas my average cost has been averaged down to $117.50. So that will represent an unrealized profit or loss of $188. So this is in a green position. It's profitable already, finally. Okay, if you look at my recurring buy, 375 QQQM every 2 weeks. Okay, no joke one, I automate it. So then you see the 1 month has been a steady good uptrend. So overall, I think that both my tickers of BUOU and QQQM are in green position, but my Google is still at a major loss because I'm still $30 away from my average price. So hopefully this year will be good, but remember, hope is not an investment strategy. So my Syfe Trade portfolio is close to break even already, and if you have not signed up for either Syfe Wealth or Syfe Trade yet, you can use my referral link down below, key in the code HONEYMONEY if you need, and you can get $70 if you make a first deposit into your Syfe Trade account. I mean, $70 is free money, right? It's just putting $2,000 inside. But you know, Syfe is not the only one offering new user rewards, because I do have my sponsor Weibo doing that as well. Happy New Year and 恭喜恭喜发大财 as we welcome to the January of 2023. This month, the brand new Weibo reward system will be slightly different because firstly, you will get $50 of trading voucher if you buy at least $100 of US stock or ETF, and on top of that, you have to buy a mutual fund. So to buy a mutual fund, you can go to your Weibo app, look for Wealth at the bottom, and then search for Mutual Fund Center. Then select your favorite type of mutual fund from from equity, fixed income, or multi-assets depending on your preference. You can get an additional $100 if you buy an options contract. So what I would do is to buy a 1 cent call or put option contract expiring at the nearest date, so the cash outlay is only $1. Do note that this promotion will end by the 1st of February, so do use my referral link down below or scan the QR code right here to get your Webull account today. Okay, so that's my update on my Syfe portfolios every 2 months. The next update, you can expect it in March. How are your Syfe portfolios doing? Are they doing better? Are they in the green already? Hopefully soon, because mine is still in the red, right? Slightly red nonetheless. But hopefully this year's market will be good, and look forward to my next update 2 months later. But if you really want to consider what are the other low fees trading platforms, stock brokerages, then refer to my previous video right here where I compare different stockbrokers in Singapore.